guys, how's it going?
Good,
Great.
man. I gotta say, this is the first face reveal for me. You look far more menacing in your PFP on Twitter than you do in real life.
Bald, angry guy in like sketch style. Yeah, absolutely. Hey man, I vibe code on stream like twice a week now. I thought most people have seen my face,
I
so
I've only seen the outcomes of those sort of things, so I
yeah,
haven't
there you
looked
go.
at what you built before. All right, Serpin Taxt, you're the CEO of Ethos. Driven by peer-to-peer reviews and secured by stake, Ethos is sort of a reputation network that has really grown quite a bit. I mean, I think I saw it when you first launched, and my big question was like, cool, but how do you go bootstrap the network effects here that are actually going to make this data interesting? So maybe can you just start us off? I think that for a number of people, this might be the first time that they are discovering what you've been building here. And it's very interesting mechanisms that you have underneath this reputation network. So if you could illuminate those for us, that'd be helpful.
Yeah, absolutely. So, a lot of what we have built was actually originally inspired by Friend Tech. We saw this concept of like people buying keys and getting access to rooms, and it also kind of gave this idea that like someone's key price that went up really high actually meant how credible they were because everyone was buying Ansem's key and everyone was buying CL's key and stuff like that. And so it gave me this idea a while back of like, well, what if you could actually use some sort of economic security to say, like, well, people are putting their money in this person. How can we use that as our signal of reputation? And so it was a couple years ago. I was really big on Friend Tech. I really liked Friend Tech. I liked what it was trying to do. Of course, it didn't turn out for the best, but I felt like it gave us this key insight of not only like economic security around people, but also what you said and what you did were actually stored on chain. You said one thing on Twitter, and then whatever you did might have countered that was on chain forever. And I felt like there was this emerging need, something that we've always felt in crypto for a very long time, to have an understanding of who's who, where reputation lies, where credibility doesn't, or does. And I felt like Friend Tech actually proved some of that early on that you could potentially prove it that way.
I'm really curious about building in this reputation space. Like, what is the biggest misconception people have about the reputation and credibility vertical?
Yeah, I think a lot of people believe that you already have the metrics that you need to be reputable. Uh, One of the things that Ethos does is instrument new data. It's new sets of data. I trust you, you trust me. I like this project. I don't like this project. Um, in the past, people have tried to build these kind of systems, and it's basically looking at your on-chain history. Did you mint a CryptoPunk? Well, yeah, you're probably more credible than like a random person, but doesn't make you not an asshole, right? And so like one of the things that a lot of people put pressure on is like, wait, I'm already reputable. Why should I have to be proven reputable on Ethos? And kind of to the point earlier, like, how do you even build a moat around the data that you need because you don't have any of the data when you start doing something like this? We really focused on instrumenting a new data set. And so a lot of the early objections were like, hey man, like I'm reputable and I'm not showing up as reputable on your platform. Like, well, people have to go show that they trust you, right? Like that's kind of how it works. So I would say that is typically the biggest thing. Also, kind of how people look at the scores relative to each other. I think this person is super reputable, and this guy I've never heard of is reputable. How could that be? And you're like, well, reputation's local and global. So a lot of really interesting lessons from what we've been doing with instrumenting this data so far.
Yeah. So okay, the fun thing I think where this came back into sort of my world was around some of the conversation around Zora
Mhm.
and jumping in and seeing a huge discrepancy between at least the Zora that I know and maybe what was sort of on the timeline and the
Mm.
Zora that I would say was very much known by yeah, airdrop farmers. I don't
Mm.
want to use that. It seems pejorative in many ways, but that's not the way that I mean it here. But there was a very big distinction between, I think, how people who are just using the app or who the team or it's followed their journey and the vitriol in many ways that airdrop
Mhm.
farmers had felt around an airdrop that didn't meet their expectations. And so for me, that sort of brings into question like the a necessary point of context, like who is using Ethos is very important to understand how that reputation is generated. And I guess from my point of view, airdrop farmers are least relevant to how I use crypto and I'm interested in
Mhm,
crypto, and so therefore that reputation score isn't all that interesting to me. So
mhm.
it seems like there's multiple layers of complexity here in building reputation that goes into it. So I don't know if you have, I don't know if
Yeah,
there's a question in
lots
there,
of
you know?
thoughts.
Yeah.
No, there's lots of thoughts on that one because I think Zora is really relevant. Like, I like Zora as an app. I think it's interesting. I'm not like the biggest Zora fanatic out there that thinks it's going to $10 billion or anything, but I think it's a good app. And there, like me, from my perspective, I actually realized there was a lot of nuance I was missing that I got out of Ethos, even if it was angry airdrop farmers. Like, there was a level of people that were upset about how communications worked or how they didn't announce the token until 30 minutes after it was trading. And I do think that right now, a lot of people will rag on a team or like if you think about it emotionally, most people are going to be more likely to leave a review when they're angry about something, right? Um, but everything on Ethos is weighted. So you have a score. It starts at 1200. It goes from 0 to 2800. And your score weighting has an impact of what your review has, like a result of. And so if you have a lot of people who you might consider airdrop farmers who have low social proof and low economic security supporting them, they're going to have a lower score, and their ability to impact other people's score, whether positive or negative, goes down quite a bit. On the flip side of that, one of the things that I feared, and I knew this going into when Zora started ripping again, that was missing is the positivity for Zora. Like, how do I go help unlock Zora to get more people backing it up and saying, I believe in this product. Like, people are wrong about it. I actually really like the team, and I feel like they communicate really clearly. The things that other people are saying, we need the counter to. And so at some point it's a little bit of like maturity on Ethos side for sure. We have to make sure that the weighting is working correctly, but also like eh, with Zora, we need more people to go to bat for them, right? And I haven't seen that. I need to go figure out how to activate those people so we get a better comprehensive view of projects and Zora specifically.
Yeah, I mean, I guess one of the things that will be a challenge for getting Zora stands in a neutral to generally positive mood about the project to go to
Mhm,
your site and to input their reviews and to link all of
mhm.
their reputational sort of verified accounts is that they need to believe that this is a place that influences people.
Right.
And there is a marketplace full of things that claim to be the credibility, reputation network, and yet each of them, or as far as I know, each of them is sort of creating their own new metric by which to
Mhm.
measure credibility. So I'm curious, how can your project become, or really any project become canonical in an environment where there's so many people who claim to be the ones to dictate what good reputation is?
Yeah, it's a great question. It's a big part of our strategy. We have the score, and the score is meant to be the main point of the product, right? You have a score, I have a score, the project has a score, and everyone can understand that and know what it means as it relates to each other or independently. That might not be true today, but my vision is, we're going to look back in a year and everyone is going to be using the score, whether it's you being included in something because you're not a symbol, because you're a verified human that has social proof and people backing you, or it's how someone hires someone for a new role. Hey, I need a new clip guy, I need a new streamer or something. Who do people vouch for? Who do people endorse? Like, how do you go find those people? The one difference is Ethos is the only one that is really focused exclusively on what reputation means. And so our vision is we got to go bring that score, that one part of the product that eventually becomes valuable to people and people put value into, and bring it everywhere, right? Even
So,
to Go
similar to
ahead.
like an ENS in a way.
Yeah, right. Yeah, you have to make it ubiquitous. And like that is an uphill challenge for sure, but like that is like that's what we're focused on. And we have a Chrome extension where you can see the scores in Twitter, in Farcaster. We're going to ship it actually to Zora soon, which is kind of cool. So if you're browsing web Zora and you have a Chrome extension, you can see content creator scores there, which can be a signal. We have
And
an open scene.
what motivates people to contribute their feedback on people?
Yeah, it's a good question. Like, what motivates you to leave a Yelp review?
A really bad experience.
A really bad
Yeah, I
experience.
think
Yeah,
so.
yeah,
Yeah.
yeah,
or
yeah.
or an exceptionally good experience from people who seem very authentic.
Right. You know what's funny? There are so many people that write stuff on Twitter today that are the opposite of a negative Yelp review that are like, I love this project. It's going to $1 billion, right? Like that is a part of CT and a part of how we know we interact with each other. And it's because they are trying to positively influence an outcome where they make money usually, right? So if you're in my head, if you're a Solana bull poster, you know, today you might not immediately go to something like Ethos, but one day you will, and you want to show that support and sentiment because, again, kind of what we are talking about earlier, you think that that will influence outcomes.
So it's a reputational prediction market if you're able to integrate it into enough front ends.
Right. In theory. Now, what's interesting is reputation doesn't mean price either. So like that's one of the other like it can be indicative, but it will never be the absolute like, oh, well, everyone hates this thing. Therefore, like I mean, everyone knows like hate rallies and people hate things and they go the opposite direction. Like this is just sentiment. It's meant to measure and give better insight. I actually think it's more of an indicator of long-term success of projects than short-term.
So I'm really interested in this dynamic of we were talking about airdrop farmers earlier, and I think you had a tweet that was related to a Moonbirds airdrop.
Yeah,
And I think you said something giving better allocation to partner teams who hold NFTs versus rewarding people that helped you get metrics to raise money, which would be your airdrop farmers here. They've also spent time and money on your product. I don't know, man. I get that they're farmers, but they played a much bigger role than MB holders in your story.
I like it.
Tell me
I
about
like
that.
you
What?
bringing it up. Yeah, because okay, so this is this nuanced perspective that I have that's really difficult to kind of talk about. And I think we have a negative connotation to farmers in general, especially when they're like, you know, farmers that don't put a lot of money in or they like really try to spoof things. Like, why is no one going after the hyperliquid farmers? I know people that made crazy money. We made crazy money on hyperliquid from farming it. Like, farming it and the whole concept of airdrop farms right now is really broken. The thesis that like as a founder you want lots of users and you want lots of metrics, so you're willing to open the door to whomever, that helps you raise money, that helps you become more established. Those are the tweets that you send out. How many users do I have? How much revenue do I have? Stuff like that. um, Farmers do provide an initial launch pad whether they are abusing the system or not, and they help you understand what your product does right. Do you have good uptime? And it helps you kind of build your metrics up. It helps you, it's like faking it till you make it almost. And if I go back to Bitcoin days, like no one calls Bitcoin miners farmers. Like I, I don't understand. You're farming Bitcoin. Like you were literally, you could spin up a billion different CPUs, GPUs, whatever back in the day, and you could have farmed whatever you wanted, and they're not farmers, right? They have an active role in the ecosystem.
So it
And
really
so
it's an architectural deficiency that the labor of airdrop farmers is just a derogatory way to describe the same kind of labor that miners do.
yeah, kind of. Like the problem is that in Bitcoin, it's explicit. You know what you're going to get, right? You farm, you mine. I mean, using the word, you mine Bitcoin, and you know that you have a chance at solving and getting a reward for it. In airdrop farming, the definition of reality and setting expectations are completely off. And so, like as an airdrop farmer, you're like, well, if I were to go spin up 100 instances mining Bitcoin, why wouldn't I spin up 100 instances of a towns group or whatever you know, get maximum success and make money, right? So I think it's tough. It's putting everyone in a really bad spot right now between founders, between airdrop farmers. There's a really big misset between reality and expectations, and it's because it's so squishy. The definition of reward isn't clear cut, and it makes it really challenging for both sides to be happy, in my opinion.
Do you think it's because there's a failure of design because there's mixed incentives between the airdrop farmers will do whatever you ask them to do to get the tokens, and
Right.
the architects of the protocol are optimizing for metrics that will pump the valuation of the token, which is not directly aligned with creating a good token holder set. It has other sort of
Sort of.
objectives embedded,
Yeah.
right?
Yeah, like as someone building something right now, I'm trying to build a community around what we and create a movement of people to believe in what we are building, right? Like I could say, yeah, actually we want 10 million reviews a day from random people and we go raise a bunch of money on these metrics. But actually I feel like building the community is the more important part. It's like the intangible part. And I feel like it's really easy as a founder to go down the route of like, well, I have 100,000 users or I have 10 million transactions. And it is easy to get that when you say, I'm going to reward you someday, wink, wink, quote, quote, like whatever. But you don't outline those ahead of time. And I think the last part is, as a founder, you have an incentive to support your investors and yourself the most, right? Like human beings are selfish inherently, and no one wants to admit that publicly. But like you're going to protect your own allocation, and you're going to protect the people that supported you really early on. I just feel like people are kind of leaving the airdrop farmers, even though you might be mad at them, they still provide important part of your product. They're kind of leaving them in the dust sometimes.
Maybe people are just jealous.
There you go. Yeah. I mean, it
I mean, yes, we are. We are all very jealous.
I want my hype.
Oh, brother, tell me about it.
but like no one who was fudding the hyperliquid airdrop. No one, right? Like
Everyone loved it.
But
Well,
also,
but I
like,
think, but that's such a great example, right? Because I think that in my mind, what we've seen is very much this sort of factory process for token launches, right? And it was driven by these centralized exchange listings, and it's the low float, high FDV, and the idea that, okay, well, if I launch at 6 billion and it drops 80%, I'm still dealing with a very great FDV that I can go do things. And this is what other VCs and are recommending for, I think, some of the reasons you're mentioning there, but also very, very practical reasons, right? Like if I'm going to go build an ecosystem, me having value here to be able to use to go and pay people to come build on it is strategically, it makes a ton of sense. But I think we've seen that era. I mean, I think we're past it. I think the idea of launching a token that way today, at least for me, is just like a guaranteed down only. Very few making the rebound, though I think some are. So okay, there's maybe some juice left in the squeeze there. But as we move to more decentralized networks, I think we'll see DEX tokens being available through centralized exchanges very soon. That dynamic and the power that maybe centralized exchanges had have shifted quite a bit, and so the incentives to, I need to have 10,000 people in my group chat and this many transactions so I can get on Binance, I think shifts quite a bit. And so I wonder if this is even a conversation that we're going to be having, because the conversations I have with founders, and as we think through the various opportunities in front of C Club, are very, very different than they were even 6 months ago. And I think even myself, and I think my team can admit that, or can confirm that, my preconceived notions of how we should be launching tokens and what works and what doesn't work has shifted drastically over the last little while. So I'm curious if this dynamic just kind of solves itself because the incentives change, and maybe we're already there.
I think the incentives change, and to really bring it full circle, I think Ethos will play an important part in that, right? Like at the end of the day, projects being successful is who is backing them, like what VC invested in them, right? Who's bullish on it, who remains optimistic, and how does that measure over time? And I think Ethos can help be a more pure, accurate, but weighted by reputation, a representation of that, where we otherwise get a significant amount of noise from people with less reputation.
Do you have a follow up on that, Jess?
No, I didn't know if I had a question in there, quite frankly. So he did a good job of answering it.
You answered my statement brilliantly.
Yes. Thank
you. I'm curious. You mentioned it earlier, but there's often this desire to make reference to on-chain data as a singular canonical data point or set of data points for establishing reputation. But over time, especially as things like open social graphs emerge that are really easy to get access to, as well as the proprietary graphs and connections and data that you can generate internally sort of become more viable with your network scaling. I'm curious how your perspective on the data for establishing credibility has changed since you started the project or since a few years ago, and all these narratives we've heard, and specifically about how it relates to like different types of data sources, be they open access data sources that are now freely available, or trying to get access to something difficult like XAPI that's just fighting you at every step, versus creating your own new sets of data.
Yeah, this is a really good question with a good nuanced answer. Like most social graphs so far is built on two things. Do I follow this person, and do I engage with this person? And does that mean credible? Kinda, maybe a little bit, right? It could be indicative. It does. Yeah, right. Yeah, it can show who has influence and attention. And So we can leverage some of the existing social graphs. X is a lot harder to get data from. They now put that behind their $50,000 a month plan of like who follows
Oh, we
who.
know. We
Yeah,
know.
yeah, and they're cracking down on people
And
about
even
using
then,
it.
right?
Yeah,
Yeah.
and then we also have looked at stuff like Farcaster data, which can be kind of helpful, but like our overlap of like CT and Farcaster is kind of weird. And so that is one thing that we have avoided in the past, but because we feel like the idea, this like extension of a new social graph is built on the concept of trust. Like if you think about this concept of like, and you guys might say this, so don't take offense if you do, but like and subscribe my video, right? Like go like join
No, but
like
good idea. If you have just watching this live, you should like and subscribe.
there you
So
go.
that,
Yeah,
thank you.
yeah, I'm reading your mind.
Yeah.
But like and subscribe has become the cheapest thing for anyone to do, right? You say it in every video. It becomes the easiest, most not hackable, but like easy kind of
Low
spoofy thing
lift.
today. Yeah, low lift. But you saying I trust someone, or like even like in Web 2, like you're a subscriber to their like
Oh,
I forget what the
LinkedIn.
paid groups. And sorry, I was thinking about their paid groups. Like, oh, like I subscribe to your paid group and I pay $10 a month, or even on YouTube, like I subscribe $10 a month to get like premium access or whatever to a specific content creator. That is actually way bigger of a signal than like I have 10,000 followers, right? And so we believe that this social graph that we're creating is more built on trust, where you're saying, I'm literally paying or I'm putting money against this person's name, or I'm explicitly stating that I trust this person. And I think that is that kind of elevates the lift, so to speak, on an idea like I'm just following someone where I subscribe to them.
Skin in the game.
Hopefully that makes sense. Yeah, skin in the game. Yeah, which like you need skin in the game in Web3 because everyone is trying to make money and like it's a race to zero when there's no skin in the game.
If you don't have skin in the game, somebody else's skin is in the game, and
Yeah, and they're making
yeah.
more money than you.
But
Oh
so your
man.
weighting system takes into account how much of a given asset I hold when I make a
No, it
statement
doesn't.
about it?
Yeah. No, we
Yeah,
don't.
maybe
Yeah.
can you break
That's an
down that
opportunity.
break down the mechanism here? Because I think we kind of sped past it, and I think it's
Mhm.
actually very worthwhile getting slightly more specific in how this works.
Yeah, yeah. So reviews are very simple: positive, negative, neutral reviews. You minor impact someone else's credibility score. We really lean into the idea of economic security. So I vouch for you. That actually means I take ETH out of my wallet, I put it into the Ethos smart contract, and I like backing your name with money. The kind of concept we were thinking about is like you have money in your bank account. Why not like put someone's name against it to like support that they're a real person or a good artist or whatever they might be. Now there are a bunch of other mechanisms like you can get slashed on Ethos. A lot of the stuff we've done is built on the same concept of validating and proof of stake and how a lot of these systems work, but kind of at the social layer.
How
And
would
then
someone
we've
get
added,
slashed? If I stake Jess, how would I get what would Jess have to do for me to get slashed?
yeah, right,
It's up
right.
up only, baby. You ain't getting slashed. Don't worry.
Most people tend to think
Reputation.
reputation is up only, but it's not. I think that's a key thing. Everything on Ethos is about risk too. So if you support someone who ended up being a rug puller or something, you actually can lose credibility yourself. And so in an example here, let's say that one of you got slashed and one of you is supporting each other. Well, the way that it gets slashed is someone says, hey, this person like stepped out of line. They put up a bond of their own. Today it's just credibility score, but in the future it'd be a financial bond. And you say, I believe this person stepped out of line. Here's the evidence. And it goes to a 2-day vote among other reputable people. And in this 2-day vote, there's been 200 slashes already. There's 4 of them going on right now.
What's the
Um,
quorum for that?
yeah, it's 60-40 split, but all of the votes are weighted by reputation. So someone who has a lot of reputation on the platform has a much higher, like a 25x over someone who is neutral or just getting started. Um, if you
Interesting.
don't get to 60% slash and you actually miss the minimum threshold of 40%, you lose your bond. So if like today you put up 200 credibility score and that could donk you down an entire level. Well, if people don't agree, and there's one going on for Distinct right now that I don't think will go through, I think this guy's going to lose his own credibility score. He's going to lose it and he won't be reputable anymore. So
How
like you
hard
have
is
to
it?
add risk.
How hard is it to get back 200 points?
Relatively difficult, I would say. Yeah, I mean, it's not easy.
Are there
We haven't.
serial liquidators?
Uh, there's a few people that have slashed a few people. I'm one of the people that slashes people. Like it's a content moderation or moderation part of the product, and I don't want to moderate. I want it to be decentralized. So
Mm.
whenever I feel like people are stepping out of line doing something silly or stupid, I call them out and slash myself. So I probably have 4 or 5 slashes, but I think, yeah, no one is like super crazy about it. And it's not money yet. I do think that one day having financial slashing, not a huge amount of money, but a small amount of money to where you have risk. It's the same thing as validation, right? You put 32 ETH in a validator, you always have risk. If your validator steps out of line, does something stupid, you could lose some of that money. You need the risk side of it. So
I mean, there's something I deeply appreciate about this, like these very nerdy crypto economic primitives starting to come up further up the stack.
yeah.
Because I think like mining, slashing, validating, most people are like, come on, okay, whatever. But I think when it starts to come into things like reputation, and I don't know where else it starts to come in, but I think there's a lot of uh, more consumer or social dynamics that are very similar to what mining is. I think you tied it really interestingly to the airdrop pharma dynamic here. So, uh,
It's the proven part of crypto, right? Like
right,
the proven
sure,
part of
yeah.
crypto is at the computational layer. And so like,
Yeah.
why would we not borrow those same primitives if we're trying to build something that's decentralized?
Okay, so maybe the last question here is we've already taken a bunch of your time, but this has been a wonderful conversation. Can you give a sense of what, like, how many people are using this right now, and then
Mhm.
where does that order of magnitude shift come from? What are you guys doing in this sort of next few months that is your
Mm.
sort of big bet on growing that much larger? Because to me that is obviously, you get to a certain scale. Yelp is Yelp because my dad uses Yelp.
Right. Yeah. Yeah. So right now, I'd say we're pretty focused on exclusively trying to dominate CT. Every startup intuition you've ever been told along the years is like find your niche and own the niche. Then you can figure out how to scale beyond that. So we're pretty much exclusively focused on that. We have 16,000 active profiles. Ethos is invitation only. So you have to have someone invite you. You have to provide them an ETH address. Like there's a little bit of a lift to do it. And over the past 2 months, we've given out a lot of invites, and it has resulted in spam and slop and lower scores and people that are just like quote unquote farming, right? Playing their part. But to be honest, I'm trying to set expectations straight of like that is not the type of behavior that we're looking for on this product. It doesn't help anyone. You're not creating value. And so what we have right now about I think it's somewhere in the like 6 to 7,000 daily active user range, 8 to 9,000 weekly active user range. So our profiles are still pretty engaged uh, on a consistent basis, coming in, upvoting, reviewing, doing whatever, trying to just like a validator would. You had to check in every day and kind of like interact with the system. And are things still stable? Are the same people that were trusted yesterday trusted today? But getting to a bigger scale is absolutely going to be challenging. It will basically require us removing the invitation system. And to get to that point, I have to be really confident that like our spam filtering, our ability to like prevent Sybil attacks, like the invite system is an amazing defense against Sybil attacks. Uh, our ability to reward people through our XP system, having confidence in how the incentives work, of like if we give a bunch of XP for slashing, that like completely screws over how slashing works. Like these are the things that we're learning right now, and trying to put into practice and understand more about how the human psychology interacts with these things and thinks about it because it's a new product. Like no one really has tried to do this before. And then in the near term, what we're actually working on is we're bringing that score everywhere that you are. We're working with different partners to make it a part of whether they're onboarding or giving you bonuses for being a real person or not a real person. Talking to different people that are working on fundraise platforms of like, oh, well, you should, as a founder, you should target this particular user because they're very reputable and you want them on your cap table kind of thing. So bringing that score everywhere, but also one of the last things that'll cover is we're working on different ways to enable more trustful interactions in Web3. If you think about it, a lot of the interactions that we have, there's no foundation of trust. And we do look at ourselves kind of as infrastructure. And so we're trying to build more like products on top of Ethos, basically. Like what like use cases in Web3 get better because they're on a foundation of trust? Well, there's a ton of them. So we're building some of those in-house as well.
The vibe code with Serpin Taxt. I think we had a Ethos backed or based friend tech that you
Yeah.
did this week, which
Uh-huh.
is interesting to hear. It's a sort of full circle moment here as you're coming back to building that. All right, my man. We're going to leave that there with you. Thanks for this wonderful conversation. If there are
Been
people
awesome.
who are eager to come join and kick the tires, I mean, I know you can get a full sense of the product just by clicking the links in Serpin Taxt's X account here. But how do we get in? How do we start using this?
I would say if you reply to the like stream tweet that you guys have and you tag me, I'll figure out a way to get you in. So
Okay, yeah.
that's a good, easy call to
Super
action.
easy.
Mhm.
Yeah, go just reply to the tweet here, and we'll get Serpin Taxt to pull you in, and
Yep.
you start participating in reputation markets.
Love it.
Markets everywhere. We love it. Thanks for hanging out with us today, and best of luck, my man.
Thanks for having
Thank
me.
you.